Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, December 10th, 2021. As always, please don't forget to keep this channel going by hitting the like button and subscribe to this channel. Also, if you have any feedback, share it below or send it directly to me. I would like to hear it from you. Alright, so we're gonna look at, as always, stocks. I'm gonna give you some examples. Real estate, technology, and consumer staples are hitting new records. High yield bonds, we'll look at that. Still, together with treasuries, they're not terribly decisive. We'll look at dollar, gold, and inflation and how they working together. Look at natural gas and at Bitcoin. If you're a subscriber, you will also receive videos on all of these stocks separately if you're a subscriber. So if you haven't subscribed yet, consider signing up at MasterChartsTrading.com. Alright, let's get right to it. So S&P 500, a few days ago I said, we dropped towards this green support resistance line. It looks like it is acting as support yet again, even though it's a weak support. So it is very likely that we're gonna hit new records. We're so close to new all-time record highs. As always, I'm using my indicators, the green, blue, red, and yellow line. So pretty much that's all I use, and these are support resistance. You can think about them as just navigation posts of where you want to buy and sell the various securities. So S&P is basically approaching new records. I would consider holding, as far as long-term holds. I will show you how it looks on a weekly chart and a long-term chart, and this is how it looks like. You buy and you do nothing. So we would have bought back in May 2020, week of 18th of May. We can probably buy a few weeks later as well. But basically our stop is at the blue support resistance line. You can kind of see it here, and nothing is really changing. We just continue to hold. Same goes for Nasdaq. So Nasdaq, notice there's this gap right there. See how it gapped above this green line right there. Most likely we will see new records as well. The correlation between S&P and Nasdaq is very high, so it's all this very similar thing. Small caps are underperforming. This is an actual alert to my subscribers right there. December 7th. So right now we're waiting. You can see that the yellow line where the stop is, we would be making it. See how it's moving up. So that means we can tighten our stop, thus reducing our loss should it even get there. But for now, I'll just be holding this security IWM and see. We might make new records. I mean, if S&P goes to new records, I don't see why the small caps shouldn't as well. Correlations are very high. I wanted to show you a few stocks which are indeed breaking to new all-time record highs. And here's one, real estate, IYR. So this is a weekly chart, and you can see how easy it is, what I'm doing. Basically, when the stock closes above the blue line, we buy it there. We put our stop at the yellow support resistance line. Once our target is reached, which is about like right there where I'm hovering, we take our stop from the yellow line and we move it to entry. At this point, it's very difficult for you to lose, but anything is possible. And we just hold on and ride this higher and higher and higher. So real estate seems to be doing quite well at new all-time record highs. XLK technology, same general principle. We will be buying back here in May of 2020. Once again, there's just not a good opportunity to get in. We would have been trailing at our blue line. Notice it has not been hit ever since. So we would be just holding. Same goes for XLP. This is consumer staples, and there were several opportunities to buy. and the latest one was probably around June of 2020. And once again, we just hold, we do nothing. Another opportunity actually was right there in October of last year. And let me see if it was sent. Probably, yeah, it was sent right there. So there's October, of this year, 2021. So this is how it looks on the daily chart. This is how it looks on the weekly chart. Weekly chart just means that we need to wait until Friday to make all of our transactions, or until the last day of the week, if there is a holiday on Friday. But on daily charts, we can trade very easily as well. So there's an opportunity. It's pretty obvious. The stock came down, the stock touched the blue line, the stock closed above it. We bought it right there, put our stop at the yellow line, waited for our targets to be reached. Target is right there, reached on 14th of October. We moved our stop to entry. We continue to trail at the blue line. You could take profits, absolutely. But, generally speaking, it's better to hold as long as possible. All right, switching gears a little bit, we're looking at junk debt right now. So junk debt and stocks correlate quite highly, as I already mentioned on numerous occasions. What worries me about the junk debt is it has indeed entered the bear market, right there where I'm hovering on 24th of November. It has bounced since then, and now it's kind of getting close to the bullish level rather. So when or if it closes above this blue line, we will say that, okay, bear market is over. This little tiny thing was a bear market, and then we will start buying junk debt. This will actually be very good news, because junk debt and stocks sort of move together. And if stocks move together with junk debt, if junk debt also continues higher, then there is an extra confirmation for stocks that they're in an uptrend. So we want to be continuously monitoring both the junk debt and the stocks. So right this instant, this does worry me, because we're seeing junk debt in a bear market while stocks are in a bull market. So it's a divergence. We want to be on the same page, and ideally we should see a junk debt move higher and close above 108.77, the blue line right now. On a more higher quality continuum, so this is TLT Treasuries. I actually bought right there 26th November at 150.50, and my target was reached. I took a little bit of profits here, and I moved my stop to entry. So I got stopped out about like at 150.30 or so. So I took a little bit of profits, guaranteed me that I had a profit. I got stopped out, just a little bit above my entry. Means that I did not lose any money. So overall, it was a small profitable transaction. Right now, I'm getting ready to probably buy it again. We can also project the indicators into the future, and this is why I'm a little bit hesitant, because notice the blue line will continue to decrease into January. So we'll see where this goes, but there is a good chance that the treasuries will continue to kind of move sideways, and then we'll see what happens. For now, I'm still thinking the treasury bonds are in an uptrend. Generally speaking, this means that there is some fear in the market, but there's not a lot of fear right now, because the treasuries are not spiking higher. Let me show you what the fear truly looks like. And this is what the fear looks like. This is from 2020, January. So this is the pandemic right there. This is the fear spike from January 2020 into March 2020. And then it basically unraveled. All right, moving on to the Forex universe. This is dollar currency index. Notice very nice move higher. Actual alerts here from September of this year. Continuously moving higher. Right now we're kind of trading sideways. Let's see where this gets us. We're in an uptrend for the dollar. It is a little bit overextended to the upside, so it would make sense for it to pull back. If it does pull back, a logical level to pull back to would be around 94. the blue support resistance line where I'm hovering. Will it actually happen is anybody's guess. So I'm just gonna wait and see what happens. Gold has been under significant pressure. I mean, I thought we broke out right there on 11th of November into the bull market, but then we collapsed, and now we're back into the bear market for gold on 30th of November, right there where I'm hovering. So right now the bias, or what am I thinking the direction would be, is to the downside. So my bias for gold is to the downside. My bias for dollar is to the upside. So despite, and today was one of the worst consumer price index reports in 39 years, and not just gold didn't really do much. So this is not a great sign if you're a gold bull. Looks like we may actually continue lower. Here's silver, and it's actually approaching multi-year lows. Silver is a precious metal, but at the same time it's an industrial metal. So we are looking at it from point of view of, is there inflation? If there was inflation, silver and the gold should be spiking higher, but I don't see it. So is this true inflation, as in a sense of loss of faith in the dollar, faith in the currency? I don't think so. It seems like this inflation has an actual cause, and it's definitely not monetary policy. So let's wait and see what happens. Here's natural gas. So natural gas, this again actual alert. Now we're on the bearish side. We're shorting it. So if you're sophisticated, you're able to buy natural gas futures, natural gas futures options. There is also UNG and cold and boil. So the inverse and leveraged, non-inverse, regular ETF. They're not great, honestly, because of the slippage, but it's better than nothing if you're really just hell-bent on trading natural gas. Probably the best thing to do if you really want to do this is to buy puts on UNG at retail level. Now notice we have a gap here. So from December 3rd into December 6th, there was a gap, and it gapped exactly below my red support resistance line right there. Now, normally the gaps do get filled, so it looks like we're gonna get this gap filled. So if anything, the higher it climbs, the stronger would be the selling. But we also need to keep in mind that if it continues to climb, towards $4.80, where I'm hovering, the blue support resistance line, that means we're going to be again in an uptrend. And natural gas is notorious for this. It just has this huge, up or down directions changes for no good reason, really. So right this instant, again, my bias is to the downside, so I would be thinking about selling it short, if anything. Finally, Bitcoin. So Bitcoin, sort of interesting when I look at the weekly chart first. So here's the weekly chart. You can see enormous, favorable moves in our favor. Here's one from July 20th, which was centered around 9,000, when as high as 64,000. So very nice move, obviously. Couple more alerts. One was here in August, one was back in September. Now the latest one, I'm going to zoom in on this price action. You can see that we closed below this blue support resistance line. We haven't been able to close above it yet. So again, this is a weekly chart. So today is Friday, and it looks like we're going to be closing below it. So this, to me, looks like a support break, or rather, at least this Bitcoin is not holding support at a very logical level. So I did not send an alert here. I just did not like this price action, especially this candle on the 26th of November. I was correct. Notice big collapse here. We touched the bearish levels. Bearish levels, where's the red line right now at 43,000. We're getting there very close. We're approaching that level. Future doesn't tell us much. We're approaching that level. So I would be on the lookout. If you're again sophisticated, you can buy puts on Bitcoin ETFs. Now we have available Bitcoin ETFs. You can probably buy There are Bitcoin futures. You can buy Bitcoin futures options if you can afford them, of course. And yeah, this could be a a collapse, to the downside. So let's be on the lookout. Let's see what happens. But you know, if it closes below 43,000, easily we can take out 35,000. And that's it for this week's recap. So please head over to MasterChartsTrading.com. We do have a new updated name, updated logo, and new services are coming soon, including, hopefully soon, including a trading robot. So stay tuned. Trading indicators, these lines on the chart, are available for TradingView.com, this interface. So if you have a TradingView.com account, which is free, all you gotta do is sign up on my site, MasterChartsTrading.com, sign up, subscribe, and I will open the door for you. Just send me the information. If you want my newsletter, sign up for indicators and newsletter. You can get my newsletter, and you can get my, 2 of my newsletters. Also, we have Ultimate Bundle, which includes the Stock Screener, and Stock Screener is the tool to find various stocks that are, breaking out. For example, here's one, the XLP, Consumer Staples. This would have been found by a Stock Screener. Stock came down towards the blue line and closed above it, and this is where we buy it. So this is pretty much what we do. All right, that's it for this week's recap. Again, if you have any questions or feedback, leave a comment or just send me a message, and have another great trading week. Bye.